Good afternoon and welcome to NYFP. In midweek and midday trade, the major U.S. stock averages are trading mixed. We are seeing the Dow Jones Industrial Average hover right below the 14,700 level. Joining me this afternoon to weigh in on the market action is Warren Meyers of DME Securities. Warren, thanks very much for joining me today.
My pleasure. Glad to be here.
Well, we got some weaker than expected durable goods orders out this morning and a batch of earnings again. Now, we finally got the Apple results out yesterday, and investors are digesting the implications of the latest report as well as their share buyback program. Meanwhile, we have a lot of undercurrents right now, including expectations of an ECB rate cut. So what do you make of the latest action?
It's a lot of mixed information and mixed data. On the Apple earnings, boy, there's a real mixed bag of opinions there, and you could see the reaction post an earnings announcement last night, and again the way the stock's traded. We've probably had a 7 or 8 percentage range, maybe a little bit more from up and down from last night to today. So it really shows the digestion and uncertainty and the opinions or difference of opinions there. Europe closed up a little bit, and I think that was based off of the potential of ECB possibly lowering rates next week. That came from a weaker Germany sentiment, I think, was the genesis for some of that thought. I don't know if that's going to hold true or not, but just the fact that that's out there and that's floating around helped elevate Europe shares a little bit. We really seem to have a mixed bag. We seem to go from data point to data point, earnings to earnings, to really try and get some sort of direction in this market. And if you look today, you see the Dow's down a little bit, Nasdaq's down a little bit, the S&P's up a little bit. So the broader range is a little stronger today than the other two sectors. I think that's just an indication that there's a lot of mixed feelings, and it's tough to get a real sense of direction right at the moment.
And talking about a sense of direction, we have been getting mixed global economic data releases so far. The flash PMI manufacturing from the U.S., the Eurozone, as well as China did miss expectations. And in addition to that, we are seeing some consumer discretionary stocks here in the U.S. Hit 52-week high. So it's a lot of interesting and mixed action.
It really is. I think if you look at some of the very top expensive luxury type brands, they've been performing quite well. Coach in particular and things like that. So it just shows you, I think, the dichotomy of what we're seeing in the marketplace, the fact that the well-off are doing very well and maybe the rest of everybody are not doing quite nearly as well. And you're right, it's a lot of mixed information, and again, in that environment you tend to see a lot more volatility. We've seen quite a bit of that over the last 4 or 5 sessions. I would expect that to continue until we can get one sense of leadership to push this market one way or the other.
And Warren, since you mentioned volatility, I do want to ask you quickly about what we saw yesterday around 1 p.m. Eastern Time. So about 24 hours ago, there was a fake tweet from the Associated Press, and their Twitter account had been hacked. And we did see a triple-digit decline in the Dow Jones Industrial Average. So I guess that really highlights security concerns and this new age we're in, where social media does seem to send a lot of messages out there. But what was your reaction?
At first, much like everyone else, trying to figure out what's going on, because it was so quick and sudden, but the recovery was equally as fast, which led me to believe that it probably was not a real story, but it took a few minutes post that down movement back up for us to finally hear exactly what the story was. At the end of the day, what this shows you is how susceptible the marketplace is to speed trading. And I'm not saying that high-frequency trading is a bad thing on its own, but the fact of the matter is, when events like this happen, flash crash in 2010 to this event and others, you see the violent and quick reaction that happens. And unfortunately, the average investor who may not have access to that speed tends to be the ones that get hurt the most, and that's the most troubling aspect to me. How you solve this is going to be a very difficult situation, but it's something that the SEC and regulators in general certainly should be looking at seriously.
And I agree with that point, Warren. It does appear as though policymakers and security concerns will continue to be debated following this incident. So last but not least, before we wrap it up, I do want to ask you about technicals. For the S&P 500 futures, what are you watching?
Well, we've been stuck at 1575 for the last maybe a half an hour here. On the downside, the first resistance is down about maybe 1565, and then you go down about another 10 points there. 1555 is where you get some rather support, not resistance support. On the upside, it's not quite as much up, about 5 points up from our 80, 81 is where I see a little bit of resistance, and then probably 86, 87 is where it really is going to have a little bit of trouble to push through. But like I said, we've kind of been stuck at this 1575 level for quite a while. Given the way the market's acted today, I wouldn't be surprised if we end up somewhere right around where we are right now, though.
Okay, Warren, well, thank you so much for a fundamental as well as technical look at the markets today.
My pleasure. Thank you.